the JSE, firmer after the crucial Fed policy decision. That's where the United States Central Bank has raised its benchmark overnight interest rates by 0.25 percentage point. Local trade will be hoping to uphold those gains today. Makwe Masilela is Chief Investment Officer and founder at Makwe Fund Managers. He joins us now. Mr. Masilela, thank you for your time. Let's quickly get your overview of how the local exchange and the currency are trading so far.
After closing up nicely yesterday, 0.8%, the market opened down almost 0.4%, and that's in line what happened overnight in the U.S. and also what's happening with the European markets, all because as much as we expected the U.S. Central Bank to increase interest rates and signal some pausing, we didn't expect them to be that clear when it comes to the fact that we must not expect any interest rate cut anytime soon. And also this global banking issue, the banking crisis, the cheaters are still with us, and later in the session we'll be waiting to hear what the European Central Bank have to say with their interest rate decision, but we expect them to continue to hike as well.
Talking about jitters, the banking crisis, which has occupied the international markets for most of the first quarter, is the banking crisis coming to an end anytime soon?
Not anytime soon, and we are in denial, and that's typical of the market players. Remember, when interest rates go up, it means banks will start earning a better interest income, but your consumers will start struggle to repay you. And at the same time, those who've gone out to go and try to raise money, it becomes very difficult for them as businesses to do their repayments as well. And as it stands now, the economy is not growing that great, then the banks are in need of some cash, and even your customers, when they're not doing okay, they'll have to come to you and try to withdraw some of your deposits. Then it becomes a problem if you don't have sufficient income, and hence now it is starting with the regional banks, and the bigger players are trying to help out and try to buy them. I think this is the beginning of something, unless if we become proactive and try to cap this whole thing, it might become a mess.
Let's talk company news. ABEE InBev reporting higher than expected earnings as it sold, well, slightly more sales than it, I suppose, anticipated. This is in part because of the prices of beer that have gone up sharply. Talk us through their numbers.
Yes, you are right. You know, their revenue is up nicely over 13%, and that was a combination of volumes and also when it comes to the revenue per hectoliter growth. And as well, if you look at their volume sales, I mean, their volume themselves were up only 0.9%. And you look into beer itself, contributing only 0.4%, but the non-alcoholic or the non-beer segment contributing or growing by 3.6%. It's very interesting because this has they've been growing what they call the beyond the beer portfolio, and this is thus selling the likes of your canned wine, canned cocktails, and also your ciders. And as much as people are trying to move away from drinking, but people are more inclined into looking into buying what they call low alcoholic beverages and also some non-alcoholic beverages, hence that portfolio is growing nicely. But yes, going forward, the guys still have to find another way other than making money by increasing prices.
Let's conclude with retailer Pick n Pay publishing its audited results for the 52 weeks, which ended on the 26th of February 2023, and get this, declaring a dividend. Help us make sense of their performance.
You know, management, they prefer to call this very resilient results. I don't think they are resilient. They are very disappointing. Why? More than 50% of our people are spending more than 60% of their money on food. So meaning we expect that sector to continue to do okay. And if you look and who was the main contributor, it continues to be Boxer, which serves your lower LSM. And that helped them to increase the group turnover by just over 13% or so. And if you look into their clothing continues to do well, increasing sales by over 15%. That's great for them, and opening up 58 new stores. The problem is the guys, when it comes to load shedding, they're really feeling it, because so far the guys have spent almost 522 million rand when it comes to generators, and hence their profits, etc., and earnings per share down 1.3%, and unfortunately they had to cut our dividend by almost 16%.
Makwe Masilela is Chief Investment Officer at Makwe Fund Managers. Thank you very much for that markets update. Well,